The price has been driven more by the central banking sector. Consumer, the retail market in the West is not that strong, even though we're seeing anecdotal evidence, some proof, or maybe some stories that show that people are starting to wake up, they're selling gold at Costco now, and that they're running out of gold. I think there's still to see in the gold space, especially on the retail side, not just in North America, but also in Europe. And if you add that to the central banking buying that I think is going to continue, we're just in the beginning, I think, Elijah, of this gold bull market.
Central banks remain active buyers of gold, aiming to diversify their reserves for financial and strategic reasons, according to representatives from 3 central banks who spoke at the London Bullion Market Association's annual conference in Miami. Elevated demand from central banks supported gold prices throughout 2022 and 2023, even as global interest rates remained high. However, with this year's 28% rally in spot gold prices, demand has slowed, exemplified by China's central bank pausing its gold purchases for the 5th consecutive month in September. Despite the price surge, central banks from countries like the Czech Republic, Mongolia, and Mexico emphasized that holding gold in reserves remains a priority, each for different reasons. Innecco highlights Russia's continued accumulation of gold, with reserves currently at 31.5% and a target of 40%, further reinforcing the influence of central bank activity on gold prices. While retail demand in the West has been relatively weak, interest is rising, as seen by gold selling out at Costco. This growing awareness may boost the retail market in North America and Europe. Meanwhile, silver prices experienced a decline during the North American session on Monday, with silver dollar trading at $31.25, down 0.88%, as a broad risk-on sentiment prevailed. Despite efforts by the Chinese government to stimulate consumer spending, China's economy remains sluggish. Innecco points out that silver, a smaller and more easily manipulated market by central and bullion banks, is under pressure from increasing physical demand in countries like China and India. Although more volatile than gold, silver will eventually outperform as demand and price pressures mount. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I think definitely the BRICS nations that have been acquiring gold, since 2022, if you remember, 2022 was a record amount of net buying for central banks ever since the Bretton Woods Agreement in the 40s. And last year it was almost the same amount. And it's not just BRICS nations. You've had countries like Poland and other countries that are not in BRICS buying a lot of gold because they see the writing on the wall. I think that people are concerned of leaving their reserves with the U.S. or with Europe. It might be frozen or confiscated. And as I said earlier, Russia, they're up to 31.5% of their reserves in gold. And it looks like the target is going to be 40. So I think they're going to have to keep buying gold. And don't forget, these reserves always change depending on international trade. So I don't think it's going to stop. And I think eventually countries in the West are going to have to catch up as well. So I don't see any slowing down in the purchasing of gold. But I think, the price has been driven more by the central banking sector, the consumer, the retail market in the West is not that strong, even though we're seeing anecdotal evidence, some proof, or maybe some stories that show that people are starting to wake up, they're selling gold at Costco now, and that they're running out of gold. I think there's still a lot to see in the gold space, especially on the retail side, not just in North America, but also in Europe. And if you add that to the central banking buying that I think is going to continue, we're just in the beginning, I think, Elijah, of this gold bull market. I mean, silver is a much easier market for the bullion banks and the central banks to control because it's a smaller market. But I think they're running out of rope because there's a lot of physical, real demand for silver from China, India, and other countries. And eventually they'll have to cover these massive short paper positions. But the level that they're trying to defend right now is around 32.50 or even 33. I think we almost touched 33 a week or 10 days ago. I do expect eventually silver to outperform gold. But you need to remember that silver will be a lot more volatile on the way up and down.
BRICS member Russia is advancing a new proposal for a multi-currency payment system to challenge the dominance of the US dollar in global trade. This system aims to facilitate cross-border transactions using the local currencies of BRICS member nations, reducing their dependency on the US dollar. According to a report prepared by Russia's finance ministry, the Bank of Russia, and consultancy Yakov and Partners, the proposed system would shield its participants from external pressures, such as extraterritorial sanctions. Russia's push for a multi-currency payment system aligns with a broader effort among BRICS nations to establish greater financial independence from the West. Innecco highlights that this shift also ties into the increasing role of gold in global reserves. Many countries are moving away from U.S. treasuries and the dollar, instead recognizing gold as a more reliable monetary asset. For the first time in decades, leading nations outside the West embrace gold as a cornerstone of their financial systems, reflecting a growing reawakening of its significance in global trade and currency stability. Let's get back to the interview.
I think they will announce something. I'm not sure it's a currency. It's just a trade settlement mechanism. They're going to call it, I think, the unit. And it will be 40% gold-backed. That's the plan. And 60% backed by fiat currencies, i.e. if a country has, and I think there's a limit to how much you can have of the other currencies. And I think they will announce something. Whether it's going to be up and running very soon is another question. But I've noticed that the trade amongst the BRICS plus countries is less than, I think, 35 or 30% in dollars and euros now. So it's growing, it's moving that way. And the reason they're using gold is because they're not going to use the dollar. And the only thing really that you can trust as a monetary reserve is gold. I mean, people have been fooled for the last 50 years into thinking that dollars and U.S. treasuries are safe. I think that's the whole problem here, is that people are going to realize they're going to realize the most powerful countries outside the West. Well, if they're going to go for an alternative, they're going to go for gold, and I think that's going to wake humanity up to how important gold is as a monetary asset. Oh yeah, it's already doing so, even though gold is going up not just in dollars, but also in euros, British pounds, in Japanese yen. I mean, Japanese yen, we're almost at 400,000 yen per troy ounce. And even in the own BRICS fiat currencies, it's going up. But I saw a report from the Jerusalem Post the other day that Russia has 31.5% of its reserves now in gold, and I think that's going to keep growing. Oh yeah, it will definitely be a problem for the West, for government bond markets, not just U.S. treasuries, but UK gilts and European government bond markets. These countries, they're not going to. Yeah, they will not buy as many Western treasuries and government bonds as they normally would have if they weren't going into a gold-backed system. And that's going to put pressure on bond yields. And we've seen bond yields rise ever since the Fed cut rates on September 18th. It might be a little bit of the market saying the Fed is done too much in terms of cutting the things. Inflation's still pretty strong, But I think it's also to do with the fact that there will be a lot less demand for our paper, which, as you know, is you can't pay off fiat currency. The only way to retire fiat currency is to issue more and more debt. In a gold-backed system, they'll be able to settle trade, extinguish debt with gold. That's what people don't realize, that with gold and silver as well, you can extinguish debt. That's how you pay a debt. Someone comes with a promissory note or a fiat currency, and you give them the gold and silver, and you've settled the debt.
Despite fluctuating demand, central banks continue to prioritize gold reserves as a critical asset for financial and strategic reasons. While countries like China have slowed their gold purchases, others like Russia are increasing their reserves. At the same time, Russia's proposal for a multi-currency payment system highlights a growing global shift away from the US dollar, with gold playing an increasingly vital role in international trade and currency stability. As global economic conditions evolve, gold and silver remain focal points for central banks and investors. How do you think these developments will impact the future of global trade and currency markets? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.